Thank you for joining us for this edition of our monthly educational webinar. Munzer Ghosheh here with the Entrust Group. Glad you can join us today. Today's presentation is on how to buy real estate with non-recourse loan. We'll be discussing actually a very popular and often used strategy on how to leverage your retirement funds to purchase real estate. We have a very special guest speaker with us today, Jason Zook of North American Savings Bank. Jason has worked with many self-directed IRA clients, assisting them with their IRA non-recourse loans, and has been instrumental in launching the first nationwide non-recourse loan program for self-directed retirement plans. So I'm excited, as I'm sure you are, to hear from Jason shortly. But before we start here, we have a disclaimer that we'd like to read out for you. The Entrust Group, Entrust, does not provide any investment advice or endorse any products. All information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. So as for our agenda today, I'm going to go ahead and start briefly and talk to you about the Entrust Group very shortly here, about our role, our responsibilities, define self-directed IRA for you. What is it? What is its benefits? And then I'm going to go ahead and hand the mic over to Jason to talk to you about leveraging the IRA with leveraging your IRA and so on. We'll talk about how to get started with an Entrust IRA account, and then leave some time for some Q&A. So in the meantime, please, if you have any questions, just go ahead and type them in, and we will get to them time permitting. We have about an hour for this webinar. Both Jason and I will be kind of brief on our presentations, and then hopefully we'll allow you plenty of time for some Q&A, because we both feel that's an important part of having an interactive webinar. So again, a little bit about the Entrust Group for those of you out there that are not familiar of who we are and what we do. For almost 40 years, the Entrust Group has been the premier provider of account administration for self-directed IRAs and other retirement plans out there. More than 3 decades, we have empowered over 22,000 clients to assist them in reaching their financial goals and to help them understand what investment options are available for them in a self-directed retirement plan. So we work with individuals looking to diversify their retirement plans to invest in alternative assets such as real estate, limited partnerships, LLCs, and many others out there. We are the leaders in our space when it comes to education, whether it's through our knowledgeable staff with the prestigious CISP, Certified IRA Specialist designations that we have, or our nationwide offices that we offer through them national and local in-person events, or our national continuing education program that we're very proud of, that we have to offer to professionals such as attorneys, CPAs, or realtors. We strive to provide our current and prospective clients with the best education out there and the most up-to-date information about the self-directed IRA world. So what is a self-directed retirement plan? This is a question we get almost on a daily basis. Simply put, it's an IRA in which you are in charge of making all of your investment decisions. It's not a type of IRA. It's just a term for a retirement plan that provides you with greater opportunity for asset diversification outside of the traditional stocks, bonds, mutual funds that are available at a traditional brokerage firm. So a truly self-directed IRA will allow you to invest, again, in alternative assets such as real estate, limited partnerships, LLCs, precious metals, secured, unsecured notes, and the list goes on and on. It is regulated by the Internal Revenue Code. Self-directed IRA abides by the same rules, regulations as a regular IRA, if you will. The same deadlines, distributions, contribution limits, etc., apply to this self-directed IRA. Again, it's just a term, not a type of IRA. So with a self-directed retirement plan, you are responsible for in identifying the investment and doing all of the due diligence, as the Entrust Group here does not sell, offer, or any investments or provide any sort of advice, including tax, legal, or financial. So the due diligence here is the accounts holder's responsibility in identifying an investment and making sure they are comfortable with making that investment. So what are the benefits of self-direction? First and foremost, you're taking control. Take control of your own financial future and make your own investment decisions based on what you know and understand, rather than having someone tell you what is good for your retirement. It gives you the ability to further diversify. Diversification is very important when it comes to retirement plans. And self-directed IRAs, they give you that freedom to invest in almost any type of asset, meaning you have more flexibility in the amount of risk that you take, and you can act as a hedge against market volatility and so on. And tax savings. So in investing over a period of time in a tax shelter program like a self-directed IRA with tax-deferred or tax-free growth can notably increase your total and future wealth. So with that said, I'm going to go ahead and hand over the mic to Jason. Jason, good morning.
Yeah, hi, good morning. Can you hear me?
Yes, we can hear you. Thank you for joining us today. I, as well as our listeners, are really anxious to hear and learn more about non-recourse loans and how to leverage your IRA. So without further ado, Jason Zook with North American Savings Bank.
Definitely, and thanks for having me, Andrew and Munzer. And I am going to... So I am Jason Zook, and I'm with North American Savings Bank. We have been lending non-recourse since about 2004 now. A borrower came into our bank at that time, and they were looking to purchase a couple duplexes through their retirement account and wanted to get a loan. Well, they didn't know where to start. We didn't know where to start, so we kind of took the reins on that, had our attorneys look into that, spent about 6 months researching, and came up with the nation's first national non-recourse loan program for self-directed retirement accounts. Before that, there had just been maybe some hard money lenders that were in the market, which wasn't very advantageous for you with the much higher rates and fees. So today we're going to look at advantages of using debt financing to buy real estate within your Entrust IRA account, how you can get a non-recourse loan to buy real estate inside the Entrust IRA account, and then also the guidelines and parameters for an IRA non-recourse loan through North American Savings Bank. Now, my slide presentations are geared more towards NASB, although there are a few other lenders out there with some similar terms to ours, but this will be more geared towards exactly what we can offer, and I'll kind of mention what they do as well. The loan terms that we'll look at are interest rates, costs associated with the loan, the types of property that you can look for, and how we determine that property eligibility. So North American Savings Bank has been around since 1927. We are based out of Kansas City, Missouri. We offer a variety of mortgage loans, conventional investment type loans, portfolio loans, and then also the non-recourse loan. So the non-recourse loan is a small part of what we do, but the only thing that I do. Some of the $1.5 billion in assets obviously are related to the IRA loan and portfolio loans that we keep here at NASB. So if you have your account set up with Entrust and you have money in the account, you're looking to purchase real estate, you're looking to buy it free and clear or with a loan, what the loan allows you to do is either buy a bigger piece of property, obviously, or maybe multiple homes instead of one. So if you found a $200,000 home and you only have $100,000, this is where the non-recourse loan can come in and allow you to buy that bigger home and allow for more gains inside your retirement account. or buying multiple properties. If you want to buy two $100,000 properties, or in our case, our minimum purchase price is $125,000, so two $125,000 properties. That way, maybe your eggs aren't all in one basket for one home. You can look at multiple properties, sell one off, keep one. You can really make some decisions that way instead of just putting all your eggs in one basket, buying one home with just cash without using that leverage that we offer. So what is a non-recourse loan? Basically, Publication 590, which is the IRS manual, states that you cannot use the IRA as security for a loan. There is no personal guarantee. So we're not looking at your income, your assets, your employment. We are looking at the property to qualify for the loan. Most banks don't even offer this type of loan, as I mentioned. The reasons are they don't understand it, or maybe they don't want to tie up the tens of millions in their portfolio that we have to in order to do it. Or, right yet, we're still at the tip of the iceberg in this industry. There may not be enough volume for some of the larger banks to really, get into it and put their money into it to do it. So we were the only bank to offer this. We wrote the book, Leverage Your IRA, and are still the experts today. A non-recourse loan is one in which you are not personally liable for repayment of the loan. The IRA pays for the loan, and if the IRA stops payment, we can come back and take the property, but this would not affect you personally. It will not affect your personal credit. You can just walk away with it with no recourse against you, no recourse to the IRA. So some advantages of using debt financing with a self-directed IRA are that all net proceeds go back into the Entrust IRA account. So if you have a self-directed Roth account, you've already paid taxes on that money. And so when you invest in real estate or whatever it is you might be investing into, this will all grow tax-free the rest of your life. If you are using a self-directed Entrust traditional account, this would be tax deferred, so you can grow it all big right up front, and then at the end you'll have that tax hit once you're ready to retire. Leveraging your IRA does allow for larger gains in your retirement account, whether you use the traditional or the Roth. So let's look at who is eligible for a non-recourse loan. Basically, anybody who has at least 30 to 40% of the purchase price invested in the interest account has the opportunity to buy rental property using the non-recourse loan. Now, a conventional loan typically wants about 5 to 10% down in many cases. In this case, there's more risk for the lender since you can walk away, so there is a little bit larger percentage down. Well, it's a significant larger percentage down since you can walk away with no recourse against you. Give you an example. After the economic decline a decade ago, we took back many homes where people walked away from them where maybe the loan was more outstanding than the value of the home in their area. That didn't affect them personally. It didn't put them through bankruptcy. Didn't do anything to them. They did lose that down payment, but a lot of them had already lost that because of the decline. So for us, that was more of a speculative time. We had to change our lending purposes as well, and now we look more at the property's expected cash flow. Can the property stand on its own in the event of a decline? So that's where the loan amount is going to be determined, whether it's 30, 35, 40% down. We're going to look at the property's expected cash flow and make sure that it can stand on its own. So the minimum down payment requirements by the property are single family homes that are newer construction, anywhere from 30 to 35% down in many cases. If it's a newer single family detached at all, 30 to 35% down if we can get the cash flow where we need it to be. If it's an attached home, like a multifamily, a condominium, a townhome, typically we want to see about 40% down. Other types of property that would require a little bit more down, say 50%, would be a short-term vacation rental when you're depending on those short-term rents that can fluctuate depending on the season. Turnkey property, where somebody else has recently purchased the property, they fix it up and sell it to you. In order to guard our portfolio, we do require a little bit more down on it, something like that. Or if the property just has a combination of maybe it's older, it's smaller, the condition isn't quite there, curb appeal, we may require a little bit more down as well. Things that we're looking at is curb appeal, size, age, expected cash flow, and condition. As far as how everything needs to be titled, your purchase contract, your title work, your insurance must be all in the Entrust name, and we'll help you with that. If the contract is written incorrectly up front, we'll make sure and take the lead on that and require a contract amendment to the correct terminology. If you would use, say, a significant other, you can partner with them, we would issue one non-recourse loan split between the two accounts with an undivided interest on each account. So every month each IRA account would make a mortgage payment. It would collect the rents as well, but we would help with that terminology to make sure you have the correct percentages on there and to get you started that way. So now we can lend in all 50 states. It's been a little tougher in New York lately because of some of the foreclosure laws, but most other places, no problem, just depending on the property itself. We can't do anything outside the 50 states because we can't go into foreign land and take property. Although if you have enough cash, you can still go to buy property overseas and as investment homes. It'll just be a little more difficult to find a lender that can do that. I haven't found one. Maybe you have to be a hard money lender, or maybe somebody overseas, or private financing. So the processing time frame for closing a non-recourse loan is typically about 30 days, which is in line with where the mortgage industry standards are today. We do a full appraisal, but without having to look at your income, assets, and employment, it really helps us speed that up a little more with fewer documents. As far as the closing process itself, there's a lag time there because at closing, we're going to generate the documents and send them to the title company of your choice. You'll go in and sign as read and approved. Those documents will then be overnighted to Entrust location, where they will then have to look at them and make sure everything is signed correctly. You'll fill out some paperwork with Entrust on that. And then they're overnighted back to title for funding. So all that takes about 30 days from the time you find a property and get it approved with us, and we start that loan out until the time that it does close. So let's look at some of the type of loan programs that are available through NASB, as well as the few other national lenders that are out there. We offer a 5 or a 10-year ARM, which means ARM is an adjustable rate mortgage. So it's fixed for the first 5 years or the first 10 years, and then would adjust annually after that. That loan amortization period has a maximum period of about 20 to 25 years. And as you can see on the fixed loans, the longest fixed loan that we offer is 20 years. Interest rates for these types of loans, they do not change very often like the conventional market. We've actually only had one rate change in 3 years. The lowest rate we offer is 5 5/8. The highest is 6 1/4, and there are multiple loan options in between there depending on which loan product that you choose. These are each principal and interest payments, so there aren't any kind of interest-only options. Our minimum loan size is $75,000, so we don't work with a lot of the lower, cheaper type property right now. With typically that 40% down, that makes our minimum purchase price about $125,000. So in this case, if you found a $125,000 property, you would bring in $50,000 down plus closing costs, and we would want to see just a little bit of reserves in some type of retirement account. We do also, besides a purchase, you can look at doing a cash out or a cash out refinance. A few reasons somebody might do one of these is maybe they weren't aware that a loan was available up front. Had that happen many times, or in order to get the property at a good price, they had to close right away due to time constraints, and they come back and take some equity loan against the property after that. Other reasons are, they got a hard money loan up front, they need to refinance out of that and get the better rates in the 5s and lower 6s. So these funds are just distributed back into the Entrust IRA account at closing. This allows you then to take that money and do what you would like with those. In fact, many clients, what our clients will do is a lot of times they'll use the cash out refinance money or the cash out money as a down payment for the next property and get another loan on the next property. So they're using the equity in one to help buy a second one with a loan as well. The property eligibility types through NASB are single families, condos, PUDs and townhomes, different types of multifamily. We do also have a commercial division, anything 8 units or greater, or businesses. On the commercial side, typically you're looking at a $500,000 loan or higher, with about 40% down. Although the one or two other lenders that I'm aware of out there, there may be some opportunity for a little bit lower prices on those. Ours is a minimum $500,000 on the loan amount. The ineligible properties, we really don't look at anything that's not going to. If we look at it as if we had to take it back, we'd get rid of it quickly. So we're more looking at metropolitan properties, residential neighborhoods, nothing too unique. And for us, these are all pretty unique. We're not able to do a construction loan either, but we can help with the permanent financing. So we can help you right at the beginning of the construction phase, make sure we get all the appraisal in order, underwriting, to make sure we're ready. As soon as that property is completed, we can fund the builder, and now you have yourself a new property. We don't lend on any kind of fix and flips just because our only recourse is the home, so we want it to be in good condition for us to even lend on it. Some of the income requirements for the rental property, we want to see that the income exceeds the expenses, typically by about 20 to 25%. So how we do that is we're going to annualize the rental income. We will divide that then by the expenses, and that will determine the debt service coverage ratio, or DSCR. So annualizing the rent divided by expenses, 1.0 would be break even. We want to see a 1.2 to 1.25 in most cases. I'll give you an example. Say you find a $180,000 property, and you're looking at getting a 60% loan on it, so $108,000. On this $180,000 property, your rent's $1,600 a month. We're going to annualize those and make that $19,200, and then divide it by the expenses. The expenses that we use in our formula are estimated vacancy at 7%, your taxes and insurance, maintenance at $420 per unit, and a management fee at 6%. If we take that annualized rent divided by those expenses, or deduct those expenses, we now have net operating income at $14,064. And you can see if we put a mortgage on it, where the principal interest is, we're looking at a 5.75% loan. This would be for the 5-1 ARM, so it's fixed for 5 years at 5.75, $108,000 loan. Your principal interest is $9,099 over the year. If you divide the net operating income by that principal interest payment, you have a 1.55 debt service coverage ratio. We want to see a 1.0, a 1.0 is break even. We want to see a 1.2 to 1.25 depending on the property. You can see this one exceeds it and allows for very good cash flow inside your retirement account. Happy to go over these scenarios with anybody as well. So we will quote interest rates on a case-by-case basis. As I mentioned, they really haven't changed much in 3 years. The cost for doing a non-recourse loan would be 1% origination fee plus $895 total to NASB, 1% plus $895. And then after that, it's just your typical costs, whatever your taxes and insurance are, your title company costs, and appraisal. Nothing outlandish or outrageous from there. Documentation, right up front, if you'd like to get a property approved, we'll just take a look at the property with you on an eligibility form. From there, if you decide to continue after reviewing the terms, you'll just fill out a loan application and then submit to us retirement account statements, purchase contract, driver's license, and appraisal funds. There'll be some forms you'll need to fill out with Entrust as well to make sure they're ready to go at closing also. So that's the presentation on Leverage Your IRA. This is the book that we wrote. If you'd like a free copy, feel free to email me at jzook@nasb.com. Feel free to give us a call, or there's our website there also. Happy to send you over a PDF copy of that as well. Send over the loan terms, or review property, or whatever else that you would like. And thank you for joining us.
Thank you, Jason. That's great information there, actually. So to get moving on here, before we go back to our questions, Q&As, so if anyone's interested in starting Entrust Self-Directed IRAs, it's really 3 easy steps. 1 is to open the account, 2 to fund it, and 3 to purchase your asset. In terms of opening the account, it's very seamless. It's a quick process. It takes literally minutes if you go online to our website, theentrustgroup.com, and get the account set up within minutes. Or please call my office at 310-496-4216. Be happy to assist you with that. Second step typically is funding your account. It's either through a transfer from another IRA, a rollover from your previous 401k, or you can make a new contribution to an IRA, your yearly contribution. And now you're ready to purchase your investment, look for the investment home that you want to purchase, and then go from there. So that's a very valuable information there, Jason. We have about 30 minutes or so for questions. Let's see what kind of questions we have here. But before we get to that, I have a couple questions for you, Jason. And correct me if I'm wrong. Typically, people ask me, how long does this approval take, process with NASB? And typically I say it's actually quicker than any other approval, because you're looking at three things. I mean, you're looking at just one thing if it's in, like you said, an income generating property, right? So the IRA is, as an entity, is applying for the loan, not the individual here. So you're not really looking at their income, credit, or employment to facilitate the loan. You're just looking at the IRA itself, right?
Yeah, so we're not looking at their income, assets, or employment. And although we do pull credit, the credit is not what is the basis for the loan. We're making sure there's no other liens that could affect our property. So we want to just determine that. But other than that, there's nothing personally that we're looking at. We can get a loan decision same day, usually even within a few minutes sometimes. So if you fill out a one-page eligibility form with the property information, I submit the write-up to the bank chairman immediately. And if he's in his office, he'll get right back to me. It might be a few hours, might be a few minutes, but you'll know very quickly what we can lend, what the terms are, and you can review those immediately and decide if you want to proceed. At no cost to do that, no credit pull, nothing for that. That's just us reviewing you and saying, here's what we can lend, here's the terms available.
Yeah, good. And as far as LTVs, I mean, does it differ from state to state, or I'm assuming it does, right? Or...
Yeah, good question. There are certain states that are limited to 60% loans, which, most of our loans don't go above 60% anyway. It's really only newer construction, single family, detached homes that meet more stringent cash flow requirements. So although we say that we'll only go 60% in, say, California, Florida, Arizona, Nevada, some of the harder hit states, there's times that we do. If it's a newer construction property and it has the cash flow, we'll still look at going above 60%. It's really just a guide for us to go off of and not something hard and fast that we have to stick to.
I see. And you also touched up on, let's say, two IRAs, husband and wife each have an IRA and they want to go into partner to also get a loan. Is it better to set up the LLC for that? Is it a requirement from your bank, or it's really up to them to do so?
Really up to them to do so. We can lend to any type of self-directed retirement vehicle entity that they decide to move forward with. Not a problem on our side. We've worked with every kind out there.
Okay, good. So I think I have a question here saying, so no personal cash is required, correct? The deposit comes from the IRA, right?
That's exactly right, yep. Everything will flow in and out through the IRA account. In fact, the only upfront cost for us is if you decide to continue. We have to order an appraisal, and we're going to be on the hook for that. So that's the cost that we'll get up front, and then you'll bring in your earnest money to the whether it's a builder or title company. So Entrust can pay that appraisal payment up front for you. They can put down the earnest money, and then everything will flow in and out through the Entrust account.
Great. Okay. I think I have a question here. Actually, let's see here. Just trying to figure out where the questions are. Oh, Entrust, this is actually for me, Entrust fees for the setup of the account. So Edward, our fees are, we have three fees typically. There's an establishment fee when you set up the account for $50. There is a funding fee if you're doing a real estate investment, it's $175. If it's a non-real estate, it's $95. It's one time. And then to hold the asset, we have two options. One is based on number of assets that you have with us. It's a flat fee of $299 a year. Or we have a percentage basis a value option based on the value of your account. So typically one would use that if they have multiple investments with us, and it's about a 50 basis points. But again, if you have any questions on our fees, either go to our website, please, or call me directly. I'm happy to help you with that. Let's see. Question by Bo. I think the loans for raw land, and I think you already touched up on that, right, Jason?
Correct. Unfortunately, we do not lend on raw land or farmland or acreage or things like that. I have had people buy land in their retirement account, and then they'll hire a builder to build a property on it. We can then help again with the permanent financing on that, but they'd have to find the funds to build property on top of that.
Yes. Yes. Tom had a question here. Do you finance commercial income properties or only residential?
I myself can do 1 to 8 units, and then we have another division that also handles the commercial property. On the commercial side, they do have a minimum $500,000 loan. And since it's 40% down, typically the minimum purchase price is about $850 or higher. So if you'd like some more information on that, definitely let me know. I can get the terms and information to you.
Okay, great. Let's see, there's a question by Hamlet. How do you calculate the 40% down payment if it's tax-deferred IRA? Do you deduct the estimated taxes, or do you use the net as the actual down payment?
Yeah, we're not looking at the tax ramifications at all. We're looking just at the purchase price. So if you have a $200,000 property and we require 40% down, you'd have to bring in $80,000 plus closing costs at the closing, and that's your 40% plus closing costs. That doesn't require us to look at the taxes. You don't have to look at the taxes on that. Maybe when you go to sell it, that's something you'd have to look at more, but not up front for us.
Great, great. Jakaya has a question. How many non-recourse loans can you have open at one time?
Definitely. There is no limit to that. The only limiting factor is the amount of money that you have. I actually have a client that has 9 loans with us currently.
Wow. Let's see, who else? Edith has a question. I already purchased my property, but need more cash to do renovation. So I guess she could.
Yeah, unfortunately, we're not able to help with the renovation part, only once it's completed, since we don't lend on fix and flips or property that need a lot of work. If it needed some cosmetics or some, we'll lend on property that needs a little bit of cosmetic or updating, but we don't lend on fix and flips, or if somebody needs money for renovation work, we don't lend on that. The main player lenders out there don't. You'd have to find some private financing, maybe a local bank or a hard money lender for something like that, just because we don't want to come back and take a property that is half done in case something would happen, or we can't come back and take construction materials. So we only lend on property that is in decent condition.
Got it. So another question for you here, very good questions here. If an investor buys multiple properties, are they all deeded into the same name, or does each have a separate name? Reason for that, I'm not really following his question.
I think I understand where they're going now. Every property will be titled the exact same name, Entrust for benefit of their name, but they will be on separate notes and deeds. So we're not cross-collateralizing any properties together, and everything will be titled. Each property will have their own independent loan, but they all will be titled exactly the same.
Got it. Okay.
I hope that answers that question.
I think so. But again, if you have any questions pertaining to the loans themselves, please feel free to contact Jason directly, or if you have any questions about the IRAs, feel free to call me also directly. My direct number is 310-496-4216. Jason, if you'd like to, I'm trying to get to the last slide here. Yeah, there you go. So there's our information. Again, you can feel free to email me, feel free to call me, and also Jason has his information there. Jason, any final words before we finish here?
Yeah, so the 866 number will get you to the loan officers available. If you're wanting to talk to me directly, I'm at 816-508-2397. And once again, feel free to shoot me an email as well. I'm happy to start the dialogue that way and can send you a free copy of our ebook. I have seen some questions kind of pop up there about flips as well. Unfortunately, we're just not lending on those. We kind of got into that. But, great presentation, great questions. Appreciate everybody's time. Are there any other questions for me today?
No, thank you so much again, Jason, for joining us. And thank you all for being a part of this webinar today. And hope to see you in our next month webinar. Thank you so much for joining us. Take care.
Thanks, Munzer. Thanks, Andrew.
Thank you, Jason. Bye-bye.